All right, guys, welcome to this week's market recap. It is the 4th of March, 2021. And as always, we start with the US 10-year Treasury yield. And as you can see, still pretty much climbing up, and climbing up. So again, as explained in previous videos, that whenever the 10-year Treasury yield is climbing and climbing, this is a market sentiment that there is global confidence in the US market or in the US economy. And what that means is money, again, is being taken out of the debt market and it is going into more riskier type assets. So we'll have a look at what these riskier type assets are and what you should be paying attention to. So when we get into it, Powell will be giving a speech today to actually address the sell-off. Is under growing pressure to respond to the bond sell-off. So a global sell-off in government bonds paused on Thursday as investors awaited remarks by Federal Reserve Chairman Powell that could signal how the central banks will react to ructions in the sovereign debt market. So we need to understand where this money is going to. And the other news bits that we have here that we have to be paying attention to is major oil producers to review supply cuts in the critical OPEC meeting. It's actually the OPEC Plus because Russia is part of this itself. So they're having a meeting about oil productions and they'll probably set the agenda for the next 2 months in terms of oil supply. I know Russia wants to pretty much pump more supply into the market. But yeah, so we need to pay attention to what the outcome of this particular meeting will be about. But if we go back and we have a look at the US oil, it is still pretty much bullish and it is climbing up. And it has successfully shaken off from last week's shooting star with this candle here. So shook this off and we just seen a rally, as explained, going up and up. So we could essentially also get a pullback, retest this line and shoots up. But as explained, the US oil is still looking fairly bullish. But again, we need to have a look and understand what is happening in the OPEC market itself. So please pay attention to that. They are having their meetings today. Another monumental shift that could come into the market itself is, of course, the 1.9 trillion COVID-19 aid bill. This is just such a crazy amount. However, the Democrats have delayed the introduction of Biden's aid bill. So Biden is now putting pressure on the Senate Democrats to try and get this bill released as soon as possible. And you, again, will start seeing this money flooding in. But of course, that money is also going to be flooding back into the stock markets. So we need to be paying attention to that because this is just an insane amount of money that will actually be pumped into the stock market. So you got to pay attention to that over the next couple of days itself. Perhaps this could take several weeks for this bill to be released, but it's something you got to be paying attention to. Now, if we understand, as explained, that when the 10-year Treasury yield rises, it signifies investors' sentiments in the economy, and they're taken again out of the debt market and going into risky assets. We need to understand where are these risky assets that smart money is currently moving to. So what's driving the market? The great rotation is underway as some analysts describe a shift out of the high-flying technology stocks. All right, so we'll get back to that in a bit. If we go to the NASDAQ, we can see NASDAQ's kind of down. It actually fell out of this ascending wedge, which is typically a bearish signal anyway. So it's broken out of this pattern. So we're going to start seeing a bit of a retracement by the looks of it. I hope so, because there's got to be some pullback now with regards to all of this. It's just unreal. I mean, if we have a look here. I mean, this entire pattern is just unreal. It's about time that a pullback happens. So we need to start having a look at that. So particularly tech stocks are completely over-evaluated in terms of their valuation. So hence money is now starting to go into energy and the financial sector. This would be typically like your banks and so forth. But again, we've seen energy, which would be your oils and oil stocks. And this is helping to drive that particular rally that I was talking about in terms of the oil price moving into its 12-year super cycle. So oil's looking really good. But again, we need to understand what is going to be happening over here, because this could potentially add a bit of a spanner into the works, particularly if Russia looks at getting its way of pumping more supply into the market itself. So we need to be paying attention to that. Further to that, because of the 10-year Treasury yield, it is having quite a huge effect on the Asian market. So pretty much, again, the Asian markets tumble as rising bond yields ahead of Fed address. So, and these are typically the Asian tech stocks that is feeling the pain here. So resurgent worries about rising US bond yields hit global shares on Thursday as investors waited to see if the Federal Reserve Chair Jerome Powell will address concerns about the risk of the rapid rise in long-term borrowing costs. And they're not the only ones. If we have a look at the ECB, and that is the European Central Banks, they're also freaking out with regards to this, but more so in the sense of the US dollar. So again, they're mentioning we have room for maneuver and we have ammunition. So one of the suggestions that the ECB should start using its bond purchasing program to push down bond yields. So they're looking at inflation right now and how to kind of maintain that beast a bit. So like I said, there's a lot happening in the market, but generally there's still investor confidence in the US market itself, and particularly looking in the financial and energy sector. So this is where the smart money is currently itself. But of course, anything could happen. It's all dependent on what the most powerful entity on this planet, the Fed, has to say. It's also looking at what OPEC, the oil cartel, has got to say. So there's so many moving parts right now, and particularly all today. So I'm expecting quite a bit of action over the next couple of days. Well, obviously Friday and potentially going into next week itself. So keep your eyes on all of these components that seems to be floating around. I just want to go and have a look on the crypto side of things. Before we get there, let me just go back here. We did see a very nice pullback with Bitcoin, but it has bounced and it is rising back up. Come on. All right. Within the weeks itself with Bitcoin, and we are seeing a bit of a sport and going back up. My only concern now with Bitcoin, if I just zoom out here a little bit, we seem to be in a downward slope. I'm just on the weekly. Let me just go to the daily here, and you can actually see what I mean. Oh, there you go here. Look here. So we seem to be in this downward channel. So I am expecting further downward trend with regards to Bitcoin. So we seem to have reached the resistance here, and we could be looking at more of a pullback over the next few days. But we'll have to wait and see what happens. But this is what indicators are telling me. However, if we look at the MACD itself, it's looking like momentum wants to go bullish. So we've just got to pay attention. The MACD is not 100% accurate. I think it's got like close to 70% accuracy, but it's not 100% accurate. Still, anything could happen. But right now, from what I can see, we are looking at a bit of a cooling off trend. I'm not going to say a bearish trend, but it's pretty much got your downward channel here. So you just got to pay attention here with Bitcoin. I am expecting more downward pressure in the coming days for Bitcoin. If we have a look at, I think, the week's crypto story, apart from Bitcoin, would actually be the rise of the NFT, that is the non-fundable tokens. So I'm a big fan of the non-fundable tokens. I do have some non-fundable tokens collection, but I'm expecting that NFTs will do extremely well this year. So I thought this was pretty cool, just to show famed NFT artist Boss Logic to create 2,500 exclusive pieces for Eternity community. So I think this is pretty cool. So there's something to look at. If you're interested, I will put the link to this, but I'm liking what is happening in the NFT space. Another very cool story on the NFT space is rock band Kings of Leon will release a new album as a NFT, making it a digital collector's item. I think that is very cool. So I might actually look at purchasing that as part of my NFT collectibles. So again, link will be in the description, but I'm liking where this place is headed into, and I am an absolute big fan of the NFT crypto world. Another thing I would like to get into is pretty much the tweet of the week, which is by Raoul Pal, and this is the ES1 futures. So I thought this was pretty telling, and what I liked about this is, boys and girls, be cautious of this trend line. ASL have been talking about it for a while. The market is the most one-sided I have literally ever seen, and that create VAR shock risk of the sharp sell-off if the sentiment shifts. And I couldn't agree more. I mean, if this breaks, I mean, we are seeing quite an epic downtrend, a correction of note. However, you've got 1.9 trillion or whatever that amount was. That's just an insane amount. 1.9 trillion US dollars. That's going to be flooded into the market. And you know where that money's going to go. It's going to go right into stocks. So stocks could certainly still be going up. I mean, this could just bounce and still skyrocket up. In essence, just about like a melt up before we do an epic meltdown. But I really liked Raoul Pal's technical analysis here. So I'll definitely put that in the link, so check that out. But yeah, you guys are going to be so cautious what is happening in S&P 500, the Nasdaqs, and particularly the US major indexes. But as shown, a lot of the money is going into the financial sector and into the energy sector. So have a look at that. All right, guys, that's my weekly recap. I hope you have a great day. See you next time. Peace out.